Hello, thank you for joining. I'm Jannarone, Editor-in-Chief of CorpGov and IPO Edge, here with my good friend Lawrence Elbaum, who is a partner and the co-head of shareholder activism at Vinson and Elkins. Lawrence, thanks for joining me here in Orlando at the ICR Conference.
Thank you for having us. It's great to be here.
So, Lawrence, let's just start. Tell me a bit about the panel you were on yesterday. What kind of things were you digging into there?
We covered a broad range of topics from this upcoming proxy season to a little bit about SPACtivism, or what we're now calling de-SPACtivism. I heard the phrase breakatrage coined by Bob Marisi and McKinsey Partners in reference to activism against mergers, as opposed to bumpatrage, which is activism for a merger, but just for more money. And we also spoke about a range of other topics in terms of ISS and Glass Lewis governance pronouncements that just came out recently as well.
Great. Well, let's talk about SPACtivism for a minute, because you joined us just about a month ago on a virtual event. It's nice to be in person for once here. You know, there are a lot of companies here whose shares are down a lot. You know, just about everyone who went public in the last year or two, you know, is seen some pretty steep share price declines. What do you make of de-SPACtivism if we have a quick update 1 month after we talked about it last time? Do you think that some of these companies have potentially got activists knocking at their doors behind the scenes?
I think there are probably a few things going on with the stock prices decimated for most SPAC companies. The ones that are in similar industries, the boards are trying to figure out what to do with depleting cash runways. They're looking at combining to create a last de-SPAC standing motif in those very similar industries. That's one thing. Even in the absence of activism, maybe that's an activism prevention technique. But I do think a lot of investors, traditional activists, but also some of the founding investors, larger shareholders, de-SPAC era shareholders as well, are pushing for value to be restored and unlocked. And because the financing markets are so, we say they're dead or they're tight or non-existent, especially for companies of these sizes, we're going to see a push, I believe, for consolidation in that regard as well. And then I think, you know, look at some of these companies where equity mergers are not an option. I do think that investors that have come in on the dips of these stocks are going to be focused on how they can unlock value with what's left. They'll do that with the traditional activism playbook. M&A not available, share repurchases are not available. It's get board seats and try to control your own destiny through board representation. So there are a lot of threats facing the boards of these SPAC companies. They need to be ready for them.
Now, do you think the companies that are likely to actually be traditional activist targets are going to be companies that have reasonably strong balance sheets and profitability? Because I just have a hard time understanding an activist going after a company that's not making money and won't for a long time.
Well, cash on the balance sheet is always something that will be focused on. A number of these companies are trading at or sometimes below cash. So I do think that will be an element, but I think these are companies that have good technology. Probably were not in a regular market ready to go public. And they need some TLC in order to take the company out of the more venture capital phase, early stage, into more mature public company. I think there are some of these companies that are real businesses. I think there are 6 or 7 de-SPAC companies that are trading above $10, and there are a number that are trading under $10 that shouldn't be trading above $10 that are absolutely real businesses. But a number of these companies were, 2 kids in a dorm room with a clipboard who've been thrust into the role of a public company CEO and CFO in the limelight, and great technology. But these are companies in need of cash and management. And that's where I think activists can come in to try to be catalysts of change.
That's an interesting point, Lawrence. I was speaking with someone else on our program here about the striking number of founders or CEOs in these companies that have left. And I'm not sure that it's always been because an activist is actually there, but the writing was on the wall.
Yeah. Look, I think sometimes there are founders, these companies are like their children, and they get very frustrated with the board and the sponsor that helped take them public. And in some situations, they will run for the hills, dump their stock, and just keep as much as they possibly can before the company, in their view, goes down to zero. So we are seeing that in a number of these situations, and it creates an interesting boardroom dynamic when you have a founder that's not a majority shareholder, but a significant shareholder, butting heads with the sponsors that took the company public in the first place.
All right, great. Well, let's shift gears a little bit here, Lawrence. Let's talk about one of our favorite topics, ESG, which I imagine you touched on in your panel yesterday. Do you think ESG is going to be as much of a theme this proxy season as it was last year? I mean, of course, the big thing that we're going to discuss at our conference next month is some of the political pressures against it. So where do you see things going?
I think for better or for worse, ESG is going to be a part of every single proxy season for many years to come, because it resonates with shareholders, it resonates with ISS and Glass Lewis, and every year there's more and more policies that are created around these topics, and as long as that's out there, and there's still the ability to create some sort of a linkage between ESG initiatives and value creation in the long term, we're going to see it. Once an activist successfully, and there are activists trying to do this, successfully convinces the investing electorate that ESG does not create value and cannot create value, perhaps we'll see these themes less. But for the time being, BlackRock, Vanguard, Fidelity, State Street, those types of shareholders, they want to hear about value creation, ESG, hand in glove. So we're going to continue to hear about it. The shareholder activists know the electorate wants to hear about it. It's just going to be part of every campaign in our view.
All right, great. Now, this might be a tough one, but I got to ask you, do you expect to see a lot of contests actually going to vote rather than being settled this year?
So, with the advent of the universal proxy, I do think that if activists are going for minority representation on boards and come up with objectively highly qualified independent directors, I think that may incentivize boards to think very carefully about settling to avoid the possible coin flip of going to a vote. But to the extent that new activists or first-time shareholders that are running election contests are coming up with candidates that are objectively unqualified and not independent, and that pale in comparison to sitting directors, I think those will go to a fight, and companies will have great success if they stick to their guns. Again, it depends on the candidates, and first and foremost, it's incumbent upon the investors, of course, to make the case for economic change at the company. I think if they can establish that, and if they've got good candidates, there's an opportunity for discussion. But companies also need to really stick to their guns. If they've got a good economic story, even if stock price has not done well, but there's a good plan, it's been implemented, the right board is in place, and the company has a good story around it, we encourage our companies and our boards to stick to their guns, tell their story, and to take it all the way to a vote if you've got the right puzzle pieces put together.
All right, great. Well, Lawrence, we're going to leave it there. Thanks again. This is Lawrence Elbaum, partner, co-head of shareholder activism at Vinson and Elkins. Lawrence, always good to see you. Thanks for joining.
Thank you.